You can have the perfect entry, perfect order block, perfect confluence, perfect risk reward, and you'll still find a way to mess it up. Not because the setup was wrong, because some part of you didn't actually want it to work. Sounds insane, right? Let me show you how it happens. I used to think trading was 100% technical. Find the right structure, mark the right level, execute. I studied order blocks for months. Liquidity grabs, imbalance, mitigation. I got good at reading charts, and I still kept losing money on setups that, on paper, were textbook perfect. It took me way too long to figure out the chart wasn't the problem. I was. Here's the first thing nobody explains to you. Your account balance isn't just money. Somewhere along the way, it becomes attached to how you see yourself. A winning trade doesn't just make you richer, it makes you feel competent, smart, in control. A losing trade doesn't just cost you money, it feels like a verdict on who you are. And once your self-worth is tangled up with your P&L, you stop trading the market, you start trading your ego. This is the core idea from Douglas's work on trader psychology, and it explains something that used to confuse me completely. Why would a trader take a perfect setup and then exit early for no reason the second it goes into a tiny bit of profit? It's not discipline, it's the opposite. It's fear. Fear that if you let the trade run and it reverses, you'll have to face being wrong in a bigger way. So you take the small win, protect your ego, and miss the actual move your analysis correctly predicted. I've done this more times than I want to admit. Marked a clean order block on BTC, waited for the retest, got the reaction exactly like I expected, and closed the trade for a tiny scalp instead of letting it hit target. Not because my plan said to, because some part of me didn't trust myself enough to sit in the trade and be right. Second thing, most traders think the market is what generates their emotions. It isn't. Your interpretation of the market generates your emotions. Same red candle. One trader sees normal pullback, my level is still valid. Another trader sees I'm wrong, get out now. Same information. Two completely different internal reactions. The difference isn't the chart. It's what each trader has decided that chart means about them. This matters because it explains why the exact same order block setup can be executed perfectly by one version of you on one day and completely botched by another version of you a week later. The structure didn't change, your internal state did. Third thing, and this one is uncomfortable. A lot of traders don't actually want to be consistently profitable, they want to be right. Those sound like the same thing. They're not even close. Wanting to be right means you need this specific trade to work right now to prove something. Wanting to be profitable means you're fine being wrong on this trade, and the next one, as long as your process holds up over 100 trades. If you catch yourself moving your stop, holding a losing trade way past your invalidation level, or adding to a loser to average down, that's not a trading decision. That's you refusing to let this specific trade be the one that proves you wrong. I had a rule clear as day on my own strategy. If price closes back inside the order block on the 4-hour, I'm out, no exceptions. I broke that rule constantly for months, always with a good excuse in the moment. It's just wicking through. Volume looks weak, it'll reject. Every single time I broke that rule, it wasn't an analysis decision. It was me protecting my ego from admitting the trade had failed. Fourth thing, confidence and conviction are not the same, and mixing them up will wreck your account. Real confidence comes from having a tested process and trusting it, win or lose, trade after trade. Conviction is an emotional state. It feels like certainty, but it's usually just intensity. The trades where I just knew I was right, no doubt in my mind, are some of the worst trades of my life. That feeling isn't insight, it's your ego overriding your rules, dressed up as clarity. This is exactly why the polytrends approach works better for me when I strip emotion out of it completely. Untested gained or loss levels, first touch entries, defined invalidation. The method isn't magic. It works because it gives you almost no room to inject your ego into the decision. Either price respects the level on first touch, or it doesn't. There's very little space for, I feel like this time is different. Fifth thing. Your environment shapes what you see way more than you realize. If you spend all day in trading Twitter, watching people flex six-figure screenshots, your brain quietly recalibrates what a normal trade should look like. Suddenly your solid, well-managed 2% win feels small and embarrassing instead of exactly what it is, a good, controlled trading decision. That comparison isn't market analysis, it's social pressure rewriting your definition of success, and it will push you into oversized, undisciplined trades trying to catch up to a highlight reel. I stopped watching other people's P&L screenshots almost entirely. Not because I don't care how others do, because my decision-making got noticeably cleaner within a couple weeks of not marinating in that comparison every day. So here's where this actually lands, and here's the part that matters more than any chart pattern I could show you. The fix isn't a better setup. You already have setups that work. The fix is separating your self-worth from any single trade's outcome. A stopped-out trade, taken correctly, inside your rules, isn't a failure. It's just a cost of doing business. The same way rent is a cost of doing business. It says nothing about your intelligence, your worth, or your future as a trader. Practically, here's what that looks like. Before you enter, write down your invalidation level and your target based on your actual analysis, not based on how confident you feel in the moment. After the trade closes, whatever the outcome, journal one question. Did I follow my process? Not, did I make money? Did I follow my process? Over time, that question retrains your brain to measure the right thing. Your account will always tell you the truth eventually, but it tells that truth through 100 trades, not through the one you're staring at right now, needing so badly to be right. If any of this hit close to home, moving a stop to avoid being wrong, cutting a winner early to protect your ego, chasing a setup because someone online made it look easy, you're not undisciplined, you're human, running an old survival instinct in a game where that instinct actively works against you. Next video, I'll break down how to actually build a process that removes ego from your entries completely using the order block method step by step.